US markets closed another strong week with the S&P 500 up 1.5% and Nasdaq 100 gaining 1.97%, driven largely by a rally in the tech stocks. But now both the indices are approaching the supply zones that we discussed in the last week's outlook. Will they break out or get rejected? And remember, technical analysis only gives us an edge. Returns are never guaranteed. Always use risk management and discretion. Weekly performance outlook. Let us quickly recap what happened this week. The S&P 500 saw a solid gains, closing 1.5% higher, while the Nasdaq 100 outperformed with a gain of 1.97%, thanks to continued strength in the large cap tech stocks. This also marks the second straight week of gains for both the indices, which is significant because the price is now pushing into the well-defined supply zones where selling pressure could potentially return. Both indices opened with a strong price action and the uptrend remains intact for now. However, as we will see the charts later, they are very close to the overhead resistance, and any failure to break above could trigger short-term volatility in the market. Sentiment indicators: fear and greed, PCR and VIX. Now let's talk about the sentiments of the market, and this is where the things get interesting. The fear and greed index currently reads 63, which is still in the greed zone and almost unchanged from the last week's reading of 61. But the sentiment is not all one-sided. The put-call ratio 5-day average is still at 0.71, indicating that the market participants are hedging and some fear remains under the surface. And what about volatility? The VIX is trading below its 50-day average, which places it in the neutral zone and further supports the idea that the market is relatively calm, at least on the surface. So we have a classical divergence: surface level optimism versus cautious approach in the market in option market. Technical momentum overview. From a trend following perspective, the momentum is clearly building. The S&P 500 is now trading above its 125-day simple moving average, which earlier acted as a support. That's a key bullish sign. And the Nasdaq 100 side, price has now climbed above the multiple short-term moving averages and is approaching recent swings high from the earlier this quarter. This means that the market is now testing the upper edge of its short-term range. If we break above this zone with volume, we could see a continuation of the market. But if we fail here, it could lead to the temporary pullbacks or sideways consolidation, and that's where chart structure becomes very, very important. Macro news plus global market summary. Let us now take a look at some recent macro developments. The US payroll data surprised to the upside with 139,000 new jobs added in the month of May, beating expectations. The unemployment rate stayed steady at 4.2%, suggesting that the US labor market is holding firm. On the trade front, the April trade deficit dropped sharply as the demand for imports weakened. That could be an early sign of softening consumer demand. In commodities, silver surged 9%, while gold continues to face some kind of resistance around $3,300, a possible signal that the safe haven demand is rotating. Globally, we saw mixed market action. UK's FTSE 100 and Germany's DAX both were up by around 0.75% and 1.28%. Asian markets were split. Nikkei was slightly down, while Hang Seng Index and Nifty 50 gained over 2% and 1% respectively. So while the US is leading, global sentiment is still cautious. So where does this leave us heading to next week? We have a strong weekly closes, improving momentum and calm volatility. But the technical setup is now at a critical stage as both indices are very close to the respective supply zones. A breakout could likely attract new buyers and push the price to the fresh new territory, but the rejection here could invite profit booking and test the lower support zones once again. In the next section, we will break down the charts and highlight key levels to watch, including immediate support and resistance level for both S&P 500 and Nasdaq 100, trend lines, gap zones, moving averages, confluence, possible breakout scenario versus false breakout traps. Let us now head towards the chart and decode the structure in more detail. Let us start with the volatility index, that is VIX. In the weekly price chart, what we can see, in the last 8 weeks, the market has substantially calmed. The volatility at one stage was above 60 level, now which has come down to around 16.78 level. So there is a substantial reduction in the volatility, which could be potentially good sign for the market. Now this is the monthly price chart of S&P 500 index. Let us first understand the historical price action for long-term view. What is happening in S&P 500 is, since 2009, this trend line is holding good. It is acting as a dynamic support. You know that we use moving averages and trend lines to find out the dynamic support. So it is holding good since 2009. If you see the upper fiber of this rising price channel, it is acting as a resistance. Price is rejecting from this. So since 2009, the price was trading in S&P 500 in this broader rising price channel, where the lower fiber was acting as a support while the upper fiber is acting as a resistance. This gives us an hope that probably after this recent correction, this bounce is very significant in S&P 500 because there was a rounding pattern kind of a structure. This is the neckline. Price tested the neckline and again bouncing from here, because after testing it formed the bullish pin bar, and there is a follow through and pierce through action can be seen at EMA 21. Why this becomes a good support? Because it has a trend line, it has a confluence of EMA 55. At the same time, we have EMA 21 and neckline of this rounding pattern. So this is a very significant bounce. Now the price is likely to move up to this particular resistance area, which is represented by the upper fiber of this rising price channel. Let us go to the weekly price chart. What we can see, there has been a quite recovery in the market since past many weeks. But now the market is reaching to the key resistance area. Can you see here? This is the important consolidation band where the market has already reached. But if it gives a breakout of this important supply area, then there might be a potential upside move. Momentum will develop on upside and the market may enter into the fresh territory. This is the daily price chart. What we can see, this is entirely the supply area where the price action can be seen that the price got rejected earlier too. And the now price is quite in proximity of this supply area. So we might see some consolidation at this level, and after consolidation, if breakout takes place, that could be a healthy breakout in S&P 500. However, overall structure is looking good because the market structure is higher highs and higher lows kind of market structure. Currently, the price is trading above all critical moving averages. Multiple gaps will provide the support to S&P 500. This is the monthly price chart of Nasdaq 100. What we can see here is it was trading since July 2010 in a rising price channel. The lower fiber here too represented the support. Price has taken support even in the bear market. It again took support over here, and this was acting as a resistance. But there is a difference in this chart in comparison to that of S&P 500, because price in Nasdaq 100 broke out of this upper fiber and then corrected to form the rounding pattern kind of formation. But here is the neckline. Price has taken support over here at neckline with a pierce through action on EMA 21, and this trend line is a good support which has a confluence of EMA 55 and little above is the neckline of this rounding kind of pattern. Now the price is quite trading in vicinity of the earlier highs in Nasdaq 100, which is also a kind of intervention this upper fiber will provide on upside move. If you look at the weekly price chart, price got rejected multiple times here. Now price is approaching to this resistance area. So once this resistance area is taken out, then we might see a momentum building up in Nasdaq 100. However, it will be a good sign if the price consolidates here before it gives a breakout, so that the breakout is healthy. Now this is the daily price chart where you can see visibly the resistance area potential, this consolidation band. If we have similar kind of a structure of consolidation band and then a breakout, it could be potentially a healthy breakout. But so here is the big picture. Both S&P 500 and Nasdaq 100 are trading strong, backed by improving momentum and low volatility. But the real test begins now as the price action nears a key supply area. Breakout or rejection, the coming week will reveal a lot about the market strength. As always, analysis only gives us an edge. No outcomes are guaranteed. If you want to level up your understanding about the technical analysis and market structure, start with my Zero to Hero playlist. It's free, beginner friendly. The link is given in the description box below. Thanks for watching. Stay disciplined, stay curious, and I'll see you in the next update.